Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. I want to follow up with what we did yesterday, and that was using the trade triangles to determine how the potential earnings are going to be for a company before they announce them. So we looked at 20 yesterday and we showed you the stats on that. I just randomly pulled out 4 today that reported earnings yesterday. Those stocks are, we'll start with Tesla, of course. That was the big name, and these are big name stocks. We just didn't pick any random stocks out. These are big name stocks, stocks you would have heard of. So the first thing we looked at is the longer term trend for Tesla is down. That's the number one. Then we looked at our weekly trade triangle was up, meaning you should be on the sidelines. That's a sideline position in Tesla. Now Tesla reported earnings, disappointed. We're down 7% today. So we actually avoided that move had we been long, but we also missed it had we been short if we hadn't had this signal right here. But going with the signals puts the odds in your favor. This was a cover your short position and be on the sidelines. And we were short on this stock from 217.32, which is right here, and it was covered on this day here at 208. So we made money, but we would have made more money had we stayed with and not taken the signal, but that's not the name of the game. Let's take a look at the next stock we looked at, and it's Baidu. Now here's Baidu. All of our trade triangles were red on the stock, meaning you should be short this stock. Well, look what happened. It reported disappointment. The stock is down 4%. You'd be making money. There's the monthly. See, the monthly just came in on the 6th, just a few days ago, about 6 days ago, and we're down 4% of the stock. It shows you how powerful the triangles are. Now, this is Cisco. Now, this was a miss for us because we were neutral side. Longer term, we were bullish from 25.42. You can see that. But we were out of the market right here at 26.98. So we made money, but we missed this move today. So the market moved into new high ground, giving a signal to be a buyer at 28.50. It's 29.14. That's up 8%, 8.2% for the day. So we missed this one. No question about it. And there's nothing wrong with that. That's just the reality of the situation. Next stock we looked at was Whole Foods. And this one we got right, 100% right. We were long going into the report right here at 53.57 was the last close, and we're up some 5.53%. So all told, we did very well. The 2 positions we actually took in the marketplace we made money on, which is what you want to do. And Tesla, we avoided that big drop in Tesla. So that's the key thing with the trade triangles. Let's move on to look at some of the other markets. S&P cash acting very well. You've seen this market move over the highs, which is very positive in my mind. You've seen all of our trade triangles, you can see quite clearly, are positive. 100, we've just broken over this level here. It looks as though it wants to go higher. So let's see how that plays out. But generally speaking, you're above 50. The trend is positive, and we expect this market to challenge the highs and maybe even make new highs from here. The industrial is a little bit different picture there because you still have the red monthly trade triangle, and this looks to me like a big box. You haven't gotten anywhere. You're sort of trapped in this box. It needs to get out of this box before we can really say it's going up or down. But I would focus on the S&P 500 and the next market, which is going to be the NASDAQ, which has made a new high. You can see today, boom, this is the highest it's been since 2000, I believe. So again, the trend clearly looks higher for this market. I would say you could seriously look at maybe the 5,000 level on the NASDAQ. Plus 100, very powerful. Above 50, very powerful trend on the upside. Eurodollar is just beginning to maybe flatten out. It's not clear yet that's going to take place, but it's trying to. You can see we've just been there's the low here. That's where we are right now, but nothing clear. Watch the 50 line. That's going to offer resistance to this market, in my opinion. But the major trend, the monthly and the weekly, is still negative, indicating the major trend is still down in the euro against the US dollar. Gold, the trend, intermediate term trend in gold is down from 12.29. We're currently at 12.24. Let's take a look at one quick thing we could look at here that I want to show you is this. We're really right down to this Fibonacci retracement level, but we need to get these signals, the trade triangles green and the daily green as well, before we can get bullish on this market right now. For the moment, I think the best level is either to be short or on the sidelines in gold. Crude oil is beginning to try to make that turn. You can see we just sort of flattened out a little bit and sort of turned around. You can see the sort of rounding bottom we're seeing here, and that's a good sign. We're just over the 50 line again, so this is offering support, and I think that's a good thing. Now look at the weekly trade triangle is positive, meaning the trend is up in the intermediate term trend, but the daily is still negative, which is indicating you should really be on the sidelines for the moment. You want to see this daily trade triangle turn green to get positive. So there we are. We've covered a lot of markets today. Be sure to check out those earnings and the trade triangles and how you can use them to actually make some short-term profits. I'm Adam Hewison from Market Club. Thanks for stopping by.